income tax, fuel duties, bank payroll tax, national insurance,
corporation tax,
petroleum revenue tax, stamp duty, insurance premium tax, pay our taxes,
You missed the
deductibles, taxes, aka the vampires that suck away your hard-earned money while you're still saving up to get a mortgage. But don't worry, if you're planning to move there, here's 6 types of UK tax you need to know about. Before we begin, remember to hit like and subscribe because we've got the property information you need. The tax system is complex, but simply put, all who come under resident status must pay tax on all their income. You automatically become a taxable person if you spend 183 days or more in the UK in any given tax year. Now, there are other types of statuses, but those won't apply to you if you plan to migrate there. These basic taxes are what you need to know. Let's begin with the first type of tax, UK income tax. Once you set foot on English land, you need a job so you can pay your bills and also pay income tax to the UK government. There are many types of income that can be taxed, but your focus should be on income from employment. We'll talk about income from property later. There are 2 things to pay attention to. Number 1, there's a progressive tax system, meaning those who earn more pay more. Number 2, it's handled through the PAYE, pay as you earn system. Keep in mind that if you have foreign income, it will also be taxed. So, what does progressive mean? To answer that, let's do some maths. Here are the UK's income tax rates and bands for 2022 and 2023. Let's say your revenue is currently £70,000. Your income below £12,570 would not be taxed, but a 20% tax would be applied to the income that falls into the basic rate band, and a 40% tax on the income that falls into the higher rate band. Ta-da! Progressive tax. The lowest band, personal allowance, is set annually by the HMRC and can change. If you earn more than £100,000 per annum, your personal allowance will be reduced by £1 for every £2 beyond the 100,000 mark. So, where does PAYE come in? It strikes right before you get your salary. Through the system, the HMRC asks employers to deduct your taxes at the source. So when you receive your paycheck, your income tax and national insurance are already paid for. Wait, what's national insurance? All qualified working population are required to purchase national insurance for unemployment assistance, retirement, and other welfare expenses. Your payment fee is determined by which class you're in. For example, if you're an employee earning between £184 and £967 a week, you would pay 12% of your salary to national insurance. Let's say you've spent a couple years in the UK and you've saved up enough to buy a shiny new house. What should you know when buying a home? There are 2 types of property taxes. Number 1, stamp duty land tax, which only applies to residential properties valued more than £125,000. Here's a table containing tax rates for each price range. Just like with income tax, property tax is progressive and should be calculated accordingly. Online calculators like this can also help minimize your time and effort. Important notes. Number 1, stamp duty has to be paid within 14 days after completing the property transaction. Number 2, first-time home buyers can be eligible for tax breaks. Number 2, council tax, which pays for public services and facilities. Here are 3 things to know about submitting your council tax. Number 1, the valuation for your home. Number 2, how much your local council charges for that band. Number 3, whether you can get a discount or exemption from the full bill. So before moving into your new apartment or house, you may want to check out the local council tax rate at this website. Okay, now you're a decade in and your ambitions of investment. You want to buy another house. You might wonder, what do I have to pay now? The first thing you have to know is that stamp duty gets hiked for second home purchases. Here's a table that shows the rates and the bands. Now, you have 2 choices. Choice A is to become a landlord, put your second property up for rent and earn rental income. You may incur some allowable expenses such as maintenance and agent fees. After deducting them, you get your net income. This net income will then be included in your overall taxable income and subject to income tax. But since there's no PAYE system for rental income, you'll have to report it directly to the HMRC by filing your self-assessment at this website. If your net rental income falls below the £1,000 mark, you don't have to report it at all, but net rental income above this mark will have to be included in your assessment. Choice B is to sell your property for profit. Naturally, this will also be taxed. Specifically, what's taxed will be capital gains, which is the difference between the value of your house when you bought it and its value when you sell it. CGT is calculated based on your taxable income. If your total taxable income is less than £50,000, your capital gains rate will be 18%. If you earn more than that, you pay 28% on the amount gained. Here's a key point. As a tax resident, you have to cough up your fair share even if the gains you make are on a property you sell overseas. So, if you want to avoid incurring unnecessary tax, do these two things before you come to the UK. Sell any houses you own in your home country. This is known as clean capital. Keep this clean capital in a different bank account to avoid being taxed alongside the income you earn within the country. VAT stands for Value Added Tax, and it applies to most goods and services at a standard rate of 20%. It's already included in the price tag, so when you pay £12 for shampoo, it actually costs £10 with a 20% VAT of £2. Simple as that. It's important to know your demons so you can face them. It's even better to know your tax vampires to make sure you pay them. Also, check out our video on UK mortgages to cover all your financial bases. Remember to keep up with us for more real estate information and vampire advice. Sign up to our newsletter and follow our social media pages.